Welcome to the EXP Group's discussion of ACCA paper P5, Advanced Performance Management. We want to spend a few minutes today to discuss the external influences that act on organizational performance. So here what we really have in mind are things which exist external to a company, but which are very important for the company to take notice of. A good model of analysis for achieving this is PESTEL. This will be familiar to candidates in related papers of the ACCA. PESTEL referring to an awareness of political events going on. I think the news of the events in North Africa, for example, should be a very clear reminder of how important political events are to companies. Also, the economic impacts, an understanding of economics and the international economic scene is extremely important for companies. Not to mention the social aspects, and here this is a question of understanding the markets in which one is acting with regard to values and behaviors within that society, and also more statistical issues such as the demographics. Is the market that one's selling into an aging market? How is demand likely to be to evolve over time? Then, of course, we cannot live without an understanding of the technological impact on our businesses, and this is almost so obvious because even in our personal organizational habits, we're affected by communications devices and new products being brought onto the market, and how we deal with that and how we use them both personally and organizationally is extremely important. Then there's environmental factors which clearly are manifesting themselves and becoming more critical, not only to oil companies that experience unfortunate spills in their drilling activities, but virtually even supermarkets in terms of using paper bags as opposed to plastic bags and the implications of that. And another PESTEL analysis is basically a checklist, the L reminding us of all the legal and regulatory issues that a business is confronted with and has to take into account. In addition to PESTEL analysis, coming back to the notion of economics and macroeconomics, clearly any senior manager has to be economically literate and have a familiarity with what monetary policy is all about and what the impact is when the central bank in a respective country makes a statement or takes actions with regard to interest rates, and how this is going to play out in terms of the funding costs facing a company, labor policy, fiscal policies, taxation, and so on, the freedom of trade. All of these issues are of direct or indirect impact to the life of a company. If we come back to the environmental concerns here for a moment, we should just be aware of the idea that companies are behaving now and do feel accountable to shareholders. One will see this in many annual reports where a company will try to measure the size of its carbon footprint. In other words, how much of a negative impact is it having on the environment, and how is it reducing the size of that so-called carbon footprint. The triple bottom line approach is one way or one method in which a company seeks to account for its activities and to show that its concerns are not purely limited to business or financial results. That would be the economic bottom line that we're all familiar with. But the company is also looking at itself through the social and ecological lenses as well, and saying, okay, what are the bottom lines with regard to the social policies, labor policies that we practice, as well as the ecological implications. So those are becoming increasingly important to company. We mentioned a carbon footprint. Connected to that is the carbon trading programs that have been implemented over the last few years, whereby a company which is able to reduce the amount of pollution that it creates, so-called externalities, is able to be rewarded by that, by being awarded credits that it can sell into a kind of carbon trading marketplace. And companies that are polluting beyond a certain acceptable level would need to buy these credits. So they have an outflow of cash to be able to cover themselves for the amount that they are polluting. So there's a cash incentive here to reduce the amount of pollution that's being created, and the carbon trading program seeks across the board then to set off companies that are achieving savings in pollution against companies that are over polluting. Of course, the aim overall being to reduce the absolute level of pollution which is being caused by industry.